Good afternoon, Stuart Williamson here. Market wrap number 161. Stuart Williamson has said, at the helm, UK house prices in biggest annual drop since 2011. Are they poised to crash? What's holding them back? This is our weekly report on what's happening in the UK residential market for people who are time short but knowledge hungry. Please do like, subscribe, share and comment. That's what it's all about, just sharing some information, see what people think. So is the UK market on the edge of the precipice, as we are led to believe, when the UK house prices have had their biggest drop since 2011? Halifax reported on Friday that the average UK property price was down 2.6% in June compared to the same month last year, and more than double the drop of 1.1% in May, marking the largest such fall since June 2011. Kim Kinnard, Director of Halifax Mortgages, said, "The housing market remains sensitive to volatility in borrowing costs. Compared to the previous month, house prices were down 0.1%, taking the average to 285,932. Martin Beck, Chief Economist, Advisor to the EY Item Club, said, "Given the scale of the previous price gains and the headwinds facing the housing market from rising mortgage rates and other financial pressures, house prices are continuing to display a surprising degree of confidence and resilience." As we know, the Bank of England in May increased rates for the 13th consecutive time to 5%, the highest in 15 years, which, listening to some people, could well be the highest ever, but they don't seem to remember when it was up into the 14s, 15s, when I was a kid lad. With persistent high inflation and hot wage growth, markets are pricing the UK rates hitting 6.5% by the end of March 2024, which has pushed mortgage rates to the highest level since the financial crisis. Halifax's Kinnard said the resulting squeeze on affordability will inevitably act as a brake on demand in the UK market, and as buyers consider what they can be realistically able to offer, he said. He added that while there was a lag effect when rates go up, many existing mortgage holders with variable rate loans or rolling off fixed rate deals would face an increase in payments in the next year. Halifax also revealed that prices of existing properties, which have been driving the market up during the pandemic, were actually down 3.5% year on year in June, the steepest decline since August 2009. In contrast though, house prices of new builds were up 1.9% annually, with the strongest locations being the West Midlands, Yorkshire and Humberside, and on Northern Ireland. They all went up marginally, but at least they went up, with all other regions, especially the southeast, showing a fall. So that's places like Devon, Cornwall, Wales, the northeast that have gone up by too much. They're all starting to show a decline. Well, what do you expect when you get house prices going up by 50%, really? Okay. And what even worse news for the markets, not just that things are going down, is the fact that UK mortgage costs have passed their mini budget highs. You remember when Truss, quasi-cutting, caused these problems, they're now accusing Rishi Sunak of being the same. Because basically now the cost of a 2-year fixed rate mortgage in the UK has surpassed the highs reached at that mini budget. Banks and building societies push up prices in responses to interest rate increases. Lenders have responded to rising interest rates and expectations of further tightening by ratcheting up their cost of borrowing even further, with an average rate on a 2-year fix hitting 6.66% on Tuesday, according to Money Facts. It's the highest level since 2008. 2-year fixed rate mortgages previously peaked at 6.65% in October 2020 last year, after the unfunded tax cuts were announced by Ms Truss. The latest peak will pile great pressure on thousands of homeowners and prospective buyers already squeezed by a high cost of living. People facing financial hardship, it will be passed on for them and they will cause hardship. There will be some problems with repossessions and the like. Rachel Springall, finance expert at Money Facts, said, although consumers could still find some competitive deals, borrowers are concerned over affordability of a deal might pause their home ownership plans and indeed park the idea of financing. That's self-evident, isn't it? We're all going to take a breath. We can't forever be buying and moving up. Sometimes you've just got to sit back and calm down. And that's what I think the market really needs. Everyone expects it to keep going up and up and up and up, and it can't. On the topic of repossessions, there is a domino effect. Repossessions are at a historical low. Last month, the government announced their mortgage charter aimed at helping households squeezed by the cost of repayments. The different measures included lenders waiting at least 12 months before repossessing of homes for people who've fallen behind, and a commitment to allow borrowers temporarily to lengthen mortgage terms without affecting credit ratings. Charlotte Harrison, who is the interim chief executive of home financing at Skipton, told Treasury Subcommittee that the uptake of these measures had been driven more by life events rather than rate environment. And it's the cost of living crisis, really. She added that an increase in rates will probably lead to an uplift in customers choosing these options. Stubbornly high inflation of 8.7% is stoking bets that the Bank of England will increase rates further, with 2/3 of economists polled by Reuters last week forecasting a half-point raise in August. So, not necessarily repossessions on the horizon, but rates are still going up and market stalling. So against this, I thought, well, what is holding the market up? So I did a bit of research in different unread locations I don't normally use. And the BBC reports that the number of homes available to rent in the UK has fallen by a third over the last 18 months. The sharp, and this is basically one of the reasons that's holding up the housing market. The sharp drop in the number of listings has helped drive up rents for new tenants by 11% on average across the UK. So on one hand, increased mortgage payments, on the other hand, increased rental income for people who are looking at buy-to-let like ourselves. Letting agencies now have typically got 10 rentals compared to over 16 before September 2021, figures shared with BBC by Zoopla. This has left people searching for properties often months without luck. The total number of rental properties in the UK hasn't actually fallen, it's just that it hasn't moved since 2016. So consequently, what is the problem? The problem is there are far more people searching for a home. So there are far fewer properties available at any one time. That is the problem, really. Separately, they report that rents for new lets have increased by 11.1% in January 2023 compared to the same month before. And they then do a comparison as where it's gone up most in the UK. The figure varies greatly, with London rents increasing by 15.2%. Edinburgh and Glasgow are in the same boat, at the same level, while Northern Ireland has only gone up by 5.7%. So what I did was I did an analysis, and they've got a great tool on the BBC website where you can put in where you live and what your rents have gone up by. And the table below shows examples of what has actually gone up for new lets. I mean, there's new stuff going onto the market. And you can see across London, Newham, Tower Hamlets, the sort of stalwart residential commuter areas, Greenwich, Lambeth, have all gone up considerably in price. You know, they're up by 20%, 18%, 17, 16%. So very much so. But then you see there's a few anomalies out there as well. I mean, who would have thought that parts of Wales would have gone up by 16%? But, you know, it has done. Salford, as you can see, has gone up by 16%. So it's not just the south that's suffering, it's areas where there's great demand and little supply. I know that Neath Talbot, for example, has only got 11% availability of rental stock. And with all this immigration going on and people going to cheaper areas to live, it's putting a lot of pressure on rental increases. You know, it's putting pressure on housing. And they're saying what the ONS is saying, that 5% of the 10% increase is actually from immigration. So why is rent so high? Okay, and here I looked at the big issue. Okay, and the big issue is not a well-known media outlet, but it does have some good research. And it basically says because there's a shortage of affordable housing. Well, that's obvious. Okay, we know that. But the point is that the National Housing Federation and Crisis found approximately 340,000 new homes should be supplied in England each year to cope with the growing immigration population. Of that, 145,000 should be affordable. The Conservative government previously targeted 300,000 new homes, and it's in England alone, a 2019 manifesto commitment, but it's yet to hit that mark. In 2021, there was 216,000, and it was down to it was at 243,000 in 2019, 2020. But you look at locations like Cornwall, there's been a huge surge in Airbnbs down there, and that's increasing demand. I know in Wales they're trying to stop second homes again. Back when I was a kid, they used to set fire to them. Now they're taxing them. The actual private rental sector has had to pick up the slack if there's not enough building. While the number of people relying on this sector, in the private rental sector, fell in England between 2016 and 2019, since the epidemic, it has grown exponentially. The demand for homes continued to greatly exceed supply, therefore, Zoopla reporting that rental demand was more than 50% higher than the 5-year average, and there's just been a 1% increase in properties available. Rightmove said the number of tenants inquiring about a move on its site is 4% higher in April 2023 than it was the previous year, and 48% higher than pre-pandemic. So it's lots more people looking to rent because they're coming into the country and they can't afford to buy anymore because it is so expensive. Terrace houses have the biggest gap between supply and demand, with 4 times as many tenants inquiring about them than the number available in the market. Flats are currently finding tenants quickest. According to Tim Bannister from Rightmove, he said properties in popular areas with an affordable asking rent of that local area are likely to be snapped up almost immediately. And on average, homes are finding a tenant much more quickly than this time in 2019. So, will rent prices go down going forward? I don't think it's going to happen. The latest Ministry of Justice figures show the number of tenants being evicted by private landlords is at an all-time high. Experts predict rents will continue to rise with no sign of supply issue being tackled. Then in addition, you've got increasing mortgage rates, you've got increasing cost of living, you're getting a squeeze on these areas. People can't afford to buy, so they're having to go and rent. Landlords do pass on increased mortgage payments through higher rents, so the rents are going to get higher and higher. It's a matter of fact, but it is a niche out there for a buy-to-let landlord to go out and help deal with the problem by supplying more properties and also, be very profitable. Richard Donnell from Zoopla said the supply of homes available for rent is between 20 and 40% below pre-pandemic levels. He says renters continue to face relentlessly increasing rents, compounding wider cost of living pressures and making home and moving decisions ever more challenging, especially for singles and those on lower incomes. The chronic imbalance between supply and demand continues to press rents higher, but we expect increased stretched affordability to start to reduce the pace of rental growth in late 2024. So we've got at least until the end of next year of probably another 10% rental increase. That's virtually 30% over the last 3 years. That is terrible if you're trying to rent, but if you compare it to what mortgage rates are doing, it gives you some understanding of why the buy-to-let market is still a solid market. And I'm not being antisocial or making money from other people's problems. It's a fact of life. There is a niche out there that could be filled. So there we go. That's it for this week. Hope you found it enjoyable. That's Market Wrap number 161 wrapped up. Stuart Williamson still here at the helm, and I'll say it a second time. Stuart Williamson here at the helm because I said it twice at the beginning. Hope you enjoy it. Do take care. Do like, subscribe, and share if you can. Thank you very much. Bye bye.